I'm not sure what's worse. Either he is completely clueless about what he's talking about, or he's doing this on purpose in order to pass off bullish narrative in order to get more views. I have no idea. This is just an assumption, but the numbers don't make any sense. And it's just plain, simple logic and basic math, and it still doesn't add up. So I don't know, maybe he'll make a response video, but I'm going to play certain parts of his video and present a counter argument. And you guys let me know. I mean, if I'm wrong or not, I don't know. We'll see.
Net liquidity increases, risk assets increase. When net liquidity falls, risk assets fall. Now, if you're paying attention, you might be thinking, wait a second, net liquidity has been falling since like 2022, but the S&P keeps going up. It's a fair question, but look at what's really driving the S&P. It's not broad strength. It's a handful of mega cap tech stocks riding the AI narrative.
Okay, keep that in mind. How he's actually pointing out to the fact that, okay, well, liquidity has been draining for this many years. Why did it go up? Oh, it's because, it's basically in an AI bubble is what he's saying. But the funny thing is, he doesn't actually make the same kind of argument for Bitcoin. And he actually kind of downplays the recovery. You'll see in a moment.
If you look at assets that are really liquidity sensitive, like crypto and small caps, the correlation holds insanely well. The Russell 2000 has gone nowhere since like 2022. Crypto got destroyed in the drain and only recovered as liquidity stabilized here and there.
So crypto got destroyed, which it did, and it only recovered as liquidity, stabilized. Okay, let's just go into the charts and talk about what kind of recovery we're really talking about with Bitcoin. This is the indicator that he's talking about right here, the bright green level, right? As the liquidity fell, yes, Bitcoin collapsed. And as liquidity bottomed right here was basically the low of crypto winter, January of 2023. Let's see what kind of crappy recovery Bitcoin made during that time, shall we? So when liquidity bottomed right here, Bitcoin only made a crappy recovery of about 640%. Yeah, what a crappy recovery, right? It only recovered 640% from the liquidity low. Wow, what a shitty recovery. Like, it only surpassed its previous all-time highs and almost doubled its previous all-time high. If you call that a crappy, slow recovery in crypto, I don't know what kind of recovery you're looking for, dude. What?
There. Divergences like this, they don't just continue to last. Either stocks correct down to meet liquidity or liquidity catches up.
Exactly. See, this is where he actually makes sense. But the funny thing is, he still somehow believes that liquidity is about to come back into the market rather than having stocks and crypto, even though you're trying to downplay it, in my opinion, corrects and falls back down, which honestly, I don't know where the liquidity is going to come in from.
Thesis here is that liquidity is about to catch up. That's why
he said liquidity is about to catch up. Okay, see, this is where his argument really doesn't make any sense to me, because this is where the numbers itself doesn't add up for me. And it's just basic math.
Treasury General Account, the TGA. This one is crucial. The TGA is basically the US Treasury's checking account at the Fed. It's literally where the government holds its cash. When the TGA rises, the Treasury is pulling money out of the banking system. Liquidity decreases. When the TGA falls, the Treasury is spending that money back into the economy. Liquidity increases. That's why the net liquidity line often looks inverse to the TGA. Every dollar the Treasury stores, that's a dollar removed from markets. Every dollar it spends, that's a dollar injected into the markets. And right now, TGA is historically elevated and it cannot stay this high. It has to be spent down. And when that happens, net liquidity expands. Then we have reverse repo. This is the part people probably understand the least, but it's one of the most important. Reverse repo is basically where money market funds can park excess cash with the Fed overnight for a safe return. When money flows into reverse repo, it's leaving markets and going into the Fed. When reverse repo drains, that cash flows back into the system. From 2022 to 2024, we watched reverse repo drop from almost $2 trillion down to almost zero. That was one of the biggest liquidity waves of our lifetime. And you might be thinking, well, why didn't that pump risk assets? Well, it offset the quantitative tightening drain that we just went through. It kept us from actually crashing harder. The reverse repo was a buffer, and now that buffer is gone. But here's the key point.
Okay, just remember that buffer is gone, okay? Just keep that in mind.
But here's the key point. Reverse repo can only drain once. We already used that wave. So the next liquidity impulse can't come from reverse repo. It has to come from the TGA. And that's exactly what
it has to come from the TGA. So basically what he said is reverse repo is basically at zero. So the other liquidity pump that we're supposed to be getting is from the TGA account, which if you saw, the TGA account literally has 900 billion. Let's just round that up to $1 trillion and let's look back into the charts and let me just explain why this doesn't make any sense to me. Okay, you literally have basically $1 trillion in the TGA account, right? You spend that down, liquidity goes back up, this indicator right here. So basically right now, this indicator is at 5.6 trillion. And if that entire, let's just say 1 trillion in the TGA account comes back into the liquidity, whatever, and brings it back up, it literally only brings it up to 6.6 trillion, which is basically the same level of liquidity that we had when Bitcoin pumped up to 69,000. So if you use this as an indicator in order to justify asset prices level, we're basically going back to the same liquidity level that justified the price of Bitcoin at 69,000. Dude, we're at 91,000 right now. So if we literally use your logic and the liquidity pump is coming from the TGA, we're only going back to the same level where it justifies the 69,000, price of Bitcoin. You need more in order to even justify the current price of 91,000, even more to justify the previous all-time high of 125, and even more to even pump it up to freaking a new all-time high, dude. So literally, you need trillions of dollars more in liquidity in order to justify the price. Where is that money going to come in from? And just for reference, dude, even if, let's just say, just for fun, if the US government just went degenerate and just said, you know what, that $1 trillion that we have in the TGA account, we're not going to fund any of our programs. We're not going to even pay our national debt or the massive interest that we even owe on our national debt, by the way. We're not going to pay any of our programs, none of our federal workers, none of that. And we're just going to YOLO it all into Bitcoin. Current Bitcoin market cap is at 1.82 trillion. Even if the US just YOLO'd it all into that, the new all-time high, if they end up doing that, is 141,000. 141,000. That's basically what, 12% from previous all-time highs? And that's if the government actually YOLOs it into Bitcoin. Like, dude, if they end up using the entire trillion, all of it is not going to flow into Bitcoin. It's going to spread around the economy. And the fact that we're only going back to the same liquidity level of when it went to 69,000 for Bitcoin. So then you need way more, trillions of dollars more in liquidity to not only justify its current price, but also its previous all-time highs, and even more to even justify a higher high. Dude, and just for reference, guys, this is why it also kind of really ticks me off. You don't explain the reason why we got this massive pump, even though it's pretty obvious. Dude, March 2020, we literally got $2.2 trillion in stimulus. Remember all those free checks that we got? Dude, this is that pump. March 2020. This is the first leg of the $2.2 trillion in stimulus. The second pump was in March 2021, and that was 1.9 trillion. March 2021, right here. So this is the next leg pump. So basically, this huge liquidity pump that we had, 4.1 trillion in stimulus from these two packages alone. If you add all the rest of it, the PPP loan and all this and that, it literally adds up to over 5 trillion in stimulus. So you only mentioned the 1 trillion that's in the TGA account, which is dinky compared to the 5 trillion in stimulus we got during the COVID crap. So where is the additional trillions of dollars going to come in order to justify not only its current 91,000, because it obviously needs to go past 7, because if 7 justify for 69, you need a little bit more to justify the 91,000 current price. And in order to even justify its previous all-time highs, even more. And in order to make even new all-time highs, bro, where is all the trillions of dollars coming in? Is there some, stimulus package that's underway that I haven't heard of? The only stimulus that I heard of is the dividend, the tariff dividend that Trump is trying to get. But I really doubt they're collecting trillions of dollars in, tariffs right now. So other than that, is there any other massive, stimulus package that's underway? Not that I know of. So his liquidity, argument, it really doesn't make any sense to me. It really doesn't add up. So, and other than that, he talks about the PMI flipping, but I'm not going to play it mainly because his main argument is PMI has been in contraction for several years. And because we're about to go into QE and a shift in monetary policy, PMI should pump back up, because usually when you go from QT to QE, that's when the economy expands. Okay, I don't know about all that, but all I know is that the Fed actually said they were going to maintain the balance sheet, not expand it. There were some officials that said they were going to gradually expand the balance sheet, but they're not going to massively expand it like they did during COVID, dude. They have literally no reason to do it. Think about it. Is the market pricing in a recession? No. Is the market even pricing in a weak labor market, or even a labor market that could potentially crack? No. Unemployment is at 4.4%. Are they pricing in unemployment going past 6-7%? No. So literally the kind of QE that you guys are looking for, or this guy is looking for, is basically a black swan event at this point. The market's not pricing in any of that risk. The Feds officially don't have the reason to go into massive QE in the first place. So the actual reason to go into massive QE is going to be a black swan event, in my opinion. So how are you missing this, connection right here, dude? This is where it really doesn't make any sense. I don't know. Someone, leave a comment down below. Is my logic wrong? Because think about it, dude. Even if that entire TGA account goes down and brings liquidity back up, it only brings it back to the same level of when Bitcoin hit 69,000. I don't know. Maybe my logic is flawed. I have no idea. But I don't understand how this guy is so bullish. Hopefully he makes a response video. And in order for him to make a response, hopefully he reacts to my video. I don't know. Anybody who is subscribed to him, share this video. Let's push it out to this guy in order to get some explanation, because either I am an idiot or he has a lot of explaining to do, because this doesn't make any sense, dude. It's funny how you say stock went up only because of the AI narrative and all this and that, and it's basically in an AI bubble. And yet you forget to mention that Bitcoin basically recovered abysmal recovery of a 640% recovery from its lows while QT was happening and liquidity was basically moving sideways. So if stocks have to come down in order to, match liquidity levels or whatever, the same thing applies to Bitcoin, guys. Think about it. If stocks is basically at all-time highs because it's in an AI bubble and it burst, do you really think Bitcoin's going to be immune to the fall? Hell no. Dude, your logic really doesn't make any sense. So hopefully he makes a response video. Like and subscribe for more. Share this video with anybody who might be subscribed to him so that maybe he will respond to it. And just be careful what you guys hear about this whole narrative about, oh yeah, liquidity, is about to shift and all this and that. Where is the liquidity going to come from? Where is the trillions of dollars going to come from? That's the bigger question. So be safe out there, and I'll see you guys in the next one.